Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Donald Trump plans 25% tariffs on all steel and aluminium imports to the United States. The dollar gains as the new administration continues to press its new trade agenda. France's Emmanuel Macron ramps up investments in AI infrastructure. We'll be live in Paris, where global political and business leaders are discussing the future of artificial intelligence. Plus, Bloomberg learns activist investor Elliot has built a significant stake in BP, a potential first step to force changes at the struggling British oil giant.
In the meantime, a quick check on these markets. If you're looking for some sort of tariff reaction, you may not find it here. Futures are actually pointing higher. Eurostoxx 50 futures higher by 0.3%. The FTSE 100 right on its heels, higher by 0.1%. The commodity picture is interesting. We're going to dive into the details, but perhaps the most notable move is weakness in the Chinese yuan and weakness in the Canadian dollar. We're going to walk you through that calculus in just a moment. The countdown to the opening trade starts right now.
Any steel coming into the United States is going to have a 25% tariff.
What about aluminum, sir?
Aluminum, too.
10%?
10, no, 25%.
25 for aluminum as well?
25 for both.
President Trump there speaking to reporters on Air Force One, an aircraft largely built of aluminium and steel, but that's by the by this morning. So another Monday morning, we are dealing with Trump tariffs. This time, though, we aren't getting much of a reaction. As Kriti's already indicated, we are seeing something of a reaction in FX. Take a look at what is happening with the dollar, gapped higher first thing this morning. It's rolling over a little bit now. We're also seeing a bit of reaction in gold, but where we're not seeing a reaction this morning is in equity markets, which stands in stark contrast to maybe the previous Mondays. Remember, a couple of weeks ago, it was DeepSeek, then it was tariffs. This Monday morning, we're back to the tariff story, but not much of a market reaction.
Yeah, not so much. Certainly not a widespread risk-off session. We've got Asian equity markets under pressure, down 0.3%. But if you look at the underlying, that's not much, really, to your point. And then if you look at the underlying commodities, we see a little bit of a move higher in aluminium prices, iron ore prices through the Asia session. But again, not much. The dollar is a little firmer, certainly against the Canadian dollar. But against the Aussie dollar, the gains that the Aussie made have been unwound. So we're certainly not getting a sense of panic. I mean, this was the easiest tariff to see coming, I suppose. If you looked at the 2018 playbook, this was something that he reached for very quickly. So in that sense, this sector has sort of never been far from tariffs ever since. And we are acutely aware of the fact that these tariffs can come and go very quickly.
We are, and we should also mention that even under the Biden administration, they weren't necessarily removed. They were just turned into quotas for about 2 minutes and put on ice until those negotiations could happen. I think when we're trying to work out what the market reaction has been, there's several narratives that I've seen this morning. One, that it could take 2 or 3 days for this to kind of echo throughout the markets. I've seen that perhaps this isn't going to affect American importers as much as thought, simply because China is one of the biggest producers. A lot of that isn't actually exported to the rest of the world, so this is still a Mexico-Canada story, more so than a rest of world story. But I don't know. Maybe there is also an element of complacency here, as you were talking about, that maybe they're announced today, maybe they won't be announced tomorrow.
Maybe there is that view that actually they get rolled off as quickly as they're rolled on. The market maybe isn't taking as much risk into the weekends. Another factor that we've been talking about this morning as well. So you need to think about that in terms of the positioning narrative. There does seem to be, though, a difference emerging between tariffs that are put on to achieve something else, i.e., we want to reduce fentanyl. Therefore, we put tariffs on. And that can be negotiated relatively quickly. Longer-term, more structural issues, and the tariffs you apply to those maybe on for a little bit longer.
Yeah, it goes right back to when we first heard about the Mexico-Canada tariffs. You know, there were 3 reasons given, and so that prompted the questions, well, are there anything that the Canadians and the Mexicans can do to get rid of these? That turned out there was on 2 of those agenda items, and so you wonder whether the third, which was the size of the deficit, really mattered in that case. It certainly seems to matter to President Trump in other geographies, though, a lot.
We do have these universal tariffs later on this week. Are they universal tariffs? Are they reciprocal tariffs? I don't know. But maybe that is what the effect, that has a greater effect maybe later on this week.
Yeah, we've already seen him have some sort of negotiations with the likes of Japan, for example. We know this is also a domestically driven story, that the Nippon steel deal still very much overhangs this entire conversation. And even still talking about protectionism on that front as well. This is not going to be an acquisition, but very much talking about bringing in investment from the rest of the world, which is something France is now channeling as well. And I think that should be something where we go next year, because this idea of investing in AI, this idea of really subsidizing and investing in the sector, we've seen from both the Biden administration and the Trump administration, is something that Emmanuel Macron is talking about doing now as well, with announcing 109 billion euros in fresh AI investments that put them right on top of the UK and Germany in terms of investing in that sector.
Yes, and as with all of these, every time we hear this from any government, some of this has been floated before, 30 to 50 perhaps has been known about, but that still means a sizable number going into AI. They're talking about corporate investments, so likes of Brookfield, Iliad, Orange, Thales, these kind of names putting money in. And Emmanuel Macron acutely aware, it seems, and giving this sort of line that you need to invest and to innovate rather than focus on the regulation first. And you wonder who in Europe he's talking to there.
Yes, Brussels. So France produces a lot of its electricity from nuclear, OK? So I just want to put that out there. But let's bring up a chart of European gas versus US gas. And I'm going to use this as a proxy for the price of electricity. European gas is really expensive and much more volatile than US gas. That's Henry Hub at the yellow line at the bottom. Why would you build data centres in Europe, which consume vast quantities of energy?
Yeah.
Why would that seems uneconomic to me.
Well, the argument there isn't one of the kind of bull cases for that is that Europe is ahead of the U.S. on renewable, and so that if you needed to go to other sources of energy, perhaps that might be one.
Is the price of electricity higher in Europe than in the United States?
I mean, yes.
There you go. There's a red headline across the Bloomberg terminal. They knew we were talking about gas prices. Says European natural gas rises to a 2-year high as storage tightens.
There you go, Guy. You jinxed it. Well done. Well, let's talk about over the next 2 days. We're, of course, going to be diving into this very story, the components that go into the AI story. We're going to be live today from the AI Action Summit in Paris, where some of the world's key leaders on AI are gathering. We're going to bring you interviews, an all-star lineup, including the French finance minister, OpenAI's head of policy, and several more. On this program alone, in the next 2 hours, we're going to hear from the co-founder of Mistral AI, as well as one of the leaders of Cohere AI. I hear Tom McKenzie's having a blast today.
Yes, he's on the ground for us.
We will be there shortly. Nice to get to France. Even if we should talk about the rugby. That's just a moment. For just a moment. Anyway. Let's talk about what we've got coming up on the show and give you an idea of what we're going to be talking about. Ella Hoxha, Newton Investment Management's head of fixed income, is going to be joining us. John White, Calibrate Partners, is going to be joining us as well. We'll talk about that a little bit later on. I'm going to come back to BP in just a moment. Actually, let's do it now. Let's go to BP. We somehow seem to have jumped ahead of ourselves. BP. So Paul Singer has an issue with this chart. Let me see if I can get the chart up and we can talk about it. Basically, there is an undervaluation of BP versus Shell, and you can argue, if you compare this with US assets, even greater. So Paul Singer's built up this stake in BP. We don't know what the size of it is yet, so we're going to wait and see what exactly happens. BP's got its numbers out tomorrow, meant to have an investment day coming up. And that's been delayed and deferred because of Murray Auchincloss is we don't know what's up with him, but he's had issues, and therefore we've had to reschedule this event. Where this goes, I don't know, but I take you back to Honeywell last week. So Honeywell last week decides it's going to break itself up. Why does Honeywell decide it's going to break itself up? Well, A, because GE's done a great job of doing that. And B, because, well, Paul Singer's decided
Elliot
that's
wanted
a
to.
very good idea.
Exactly.
So you wonder what's next for BP.
Yeah, you do. And you wonder whether there'll be asset sales. I mean, this is all stuff that Auchincloss has been doing a bit of, selling some of the renewable assets, refocusing on oil and gas a little bit more. Whether it'll go fast enough for Elliot is a different question. So some of that same stuff. But could there be full-on takeovers here? Our story also points out that there are other oil majors that have been, continually running their eyes across the BP numbers and saying, could we? Would we? Would
the British government allow it? I don't know. That's always been the argument against it. That
this would be something. US steel.
This would be something that the UK government would not be happy with.
Yeah.
And therefore it would be difficult to do. But it would seem logical for a US major, cash rich, to buy BP and put BP effectively on the same valuation as Exxon.
Yeah. Well, the early market indications suggest that maybe it might be received positively. We're getting trade rate pricing right now that BP is potentially gaining about 3.3% at the open. So maybe this is something where the spin-offs, which, by the way, when it happened with GE and when it happened with Honeywell, these weren't received well by the market. Maybe this time is different.
And you flagged a February 28 date for the investor meeting taking place in New York, rather controversially. But we also have BP numbers.
I think that's been moved to London now.
again moved.
I thought it was...
I'm not out.
Anyway.
But tomorrow we get numbers from BP.
Oh,
yeah,
well.
we do.
So,
maybe they'll comment on this.
Another chance to talk about that one.
Yeah, absolutely. Let's talk about what we're going to talk about for the rest of the week. Of course, BP very much on the agenda. We're going to talk about the tariff story and the AI story. We've already hit that quite significantly today. But let's talk about as well that we have plenty of earnings throughout the rest of the week. BancoBPM, we've got that consolidation story. UniCredit caring as well. The luxury story out of France is going to be crucial. Plus, of course, Andrew Bailey speaking on Tuesday as well. And then I think the focus shifts to Wednesday. U.S. CPI data, of course, Powell is going to be testifying. This idea of tariffs equal inflation. What does he think about that? We have the World Government Summit with Jumana Bersetchi as well on Wednesday. We're excited to get those guests out of Dubai as well. And then plenty of data and earnings throughout the rest of the week. I think the highlight this week might actually be coming on Friday. The Munich Security Conference kicking off then. And we are expecting, perhaps, rumors has it, that we may get some sort of early indication of what a plan from the U.S. administration may actually look like when it comes to the war in Ukraine.
Let's talk about what else we need to know this morning. The Philadelphia Eagles fans are celebrating after their team won the Super Bowl, beating the Kansas City Chiefs at 40-22. The Chiefs were playing in their 5th Super Bowl in 6 years, but in the end they were denied an unprecedented 3rd straight win. Defence matters, I think, is the takeaway from this. President Trump was at the final, becoming the first sitting president to attend the Super Bowl in the event's 59-year history. Shein is said to be considering incentives for its suppliers in China to open new production lines in Vietnam as a way of reducing the impact of President Trump's tariffs. In particular, it's the removal of the duty-free exceptions for low-value packages that's causing concern. We're told that the fashion giant is offering incentives like higher procurement prices of up to 30% and guaranteed bigger orders. Shein spokesman confirming that they are looking to add capacity in Vietnam without elaborating. Shein has set up supply lines in Brazil and Turkey, but the bulk of its operations, to be honest, still remain in mainland China. And the German Chancellor, Olaf Scholz, struggled to land the decisive blow he urgently needs on frontrunner Friedrich Merz in yesterday's TV election debate. This is just 2 weeks away, of course, ahead of German elections. In the 90-minute duel, both candidates detailed their strategies for dealing with the unpredictability of President Trump.
We should not delude ourselves. What the American president says, he also means. And some people are quite light-footed and say it won't turn out that way, which is why I think it was important that I was the first head of government in Europe to say after the discussion about Greenland, this is not how it works. We are defending Ukraine because we say that borders must not be moved by force. But of course, that applies all the more to our partners.
Recht für unsere Partner, die dürfen das auch nicht machen.
German Chancellor speaking there. There were some hints. Friedrich Merz talking about the debt brake, talking maybe about the fact that it does need to be altered in a way that would allow Germany to increase its defence spending. So maybe the first cracks appearing in Merz's determination.
Obviously saying you need to cut spending first, you need to go there first, that needs to be your first instinct, but then open to the idea of perhaps reforming the debt brake. Interesting, I was reading Holger Schmieding's research this morning asking whether the left and the AFT would be big enough together to block any change to the debt brake. So that's another one to watch.
Oh, interesting. Well, so I find it fascinating the market isn't really pricing in even this possibility. At the end of the day, if you even do get any sort of loosening of the debt brake, it means more issuance. It should, in theory, mean yields come down, right? And we haven't seen any of that ahead of this election. Traditionally, ahead of snap elections, we get some more market reaction. There seems to be an element of complacency this time around, or maybe unbelievability might be the way to think about it.
I think it's a very small crack appearing in the facade of determination to keep this up and running and make sure that it is maintained. As you say, spending comes first and then maybe the debt brake goes second.
We will see. A good one to watch, though, Kriti, as you point out. Just 2 weeks to go then until that election in Germany. Coming up on the programme, Nokia taps Intel's Justin Hoxha for its new CEO. We'll check on that stock at the market open. Plus, we'll also get the details on BP with the energy giant coming under activist investor pressure. Up next, the tariff story continues. We'll see how markets are reacting to Donald Trump's latest levy plans on steel and aluminium. If you want to get involved in any of these conversations, please do get in touch. IB plus BBTV Go, the function you use on the Bloomberg terminal. This is Bloomberg.
42 minutes of the opening trade. We are looking at fairly quiet markets, which is surprising given the fact that actually we have another round of tariffs coming onto our agenda. We start with aluminium and steel. We're going to move on to more later on this week. But at the moment, the market reaction looks quiet outside of foreign exchange and precious metals. Valerie's back, and she's here to run us through all we need to know.
Good morning, Guy. Yes, we are seeing some volatility in the FX market. It is not the kind of volatility, though, that we saw last week. It does pale in comparison to that crazy week in FX that was last week. But we have seen the Canadian dollar weaken on the back of these reports that Trump is going to eye 25% tariffs on steel and aluminum. After that announcement, the Canadian dollar actually weakened 0.6% versus the U.S. dollar. It's come off of that since then. But the reason why, Guy, is because the U.S. imports 25% of its steel needs from Canada. Now, Mexico and Brazil aren't far behind. We might see some weakening in those Latin American currencies off the back of this. But the other note, Guy, is that equity markets have not been shaken by what Trump has told the press gaggle on that Air Force One plane on the way to the Super Bowl just yesterday. S&P futures are in the green, and I think that's a revaluation of this tariff story. We're talking about targeted tariffs. We're talking about reciprocal tariffs. What we're not talking about is blanket universal tariffs, and we're seeing some relief when it comes to the equity market and the U.S. Treasury market on the back of that.
OK. Valerie, we're going to wait. We're going to watch. I wonder if he enjoyed the game. Apparently he had a few issues with the way that the game was played. Anyway, maybe we'll come back to that. Ella Hoxha, Head of Fixed Income at Newton Investment Management, joining us around the table. More of a cautious response to the tariff story. Is the market getting used to this? Is the market beginning to get its arms around understanding, or is this just a brief hiatus in the volatility that we are seeing?
Well, we had an episode, I guess, when we had the announcements for Canada and Mexico.
Yep.
So that was probably the first.
Last Monday.
Correct, yes.
Yeah.
So 1 week is a long time in markets, as we know. And I suspect you're correct in saying there's some getting used to it. Perhaps also the view that it still remains a negotiation tactic. And so we're getting acclimatized to this new style, I guess, in markets.
Is there still a belief, though, that it is going to be inflationary? Is that still the fixed income perception that we are likely to see higher inflation as a result of tariffs? Is that still the abiding instinct at the moment?
Over the short term, I think that's generally unanimous, that it tends to be a bit more inflationary. It pushes prices up over the short term.
Yeah.
Of course, input costs for a lot of producers, particularly on aluminium and steel. Down the road, it's more questionable, and I think there's been research done on the topic. Some conclude it's more deflationary longer term, but over the short term, it's easier to conclude it's inflationary.
So, Ella, does that mean, good morning, does that mean bond markets are a bit challenged in the short term then as a result of that, if inflation fears are what the market is focused on?
I would say, actually, tariffs, less of a problem for bonds, more constructively speaking. It's much more on the sort of more sticky inflationary pressures, such as wages, for example. And we got some data to that front last week. And that matters particularly if the flow of migration is actually going to drop going forward. So for bonds, that's important. Fiscal is important, I would say. That's the sort of news that we're paying close attention to. On tariffs, as I said, short term, of course, you can get some break-evens pricing, the shorter-dated break-evens. But really what we care about over the long term is what happens to fiscal, particularly fiscal, I would say.
OK, and so what is the fiscal dynamic to watch then, as we see Besant getting into his stride, we see, the Trump administration more broadly getting into its stride, and we're watching for all of the clues. What do we watch on the fiscal side?
Well, for bonds, obviously, the agenda is a pro-growth agenda. You can see that, in terms of how markets have embraced it. So for bonds, what matters, that's why I say fiscal, is how much of that is going to come from new funding. And with that regard, is there going to be any sort of expenditure cuts and so on? And it's a fine balance for bonds between this growth agenda and inflationary agenda, as we said. And so for us, really, we want to see more in terms of the net effect of those expenditures. I mean, Besant has talked a little bit about it last week, so giving some comfort to bond markets. Let's see, going forward.
But a lot of what Besant is talking about and Trump is talking about is really based on the economic resilience story. What kind of correlation does that create for the bond market here at a time when the bond market used to trade off commodity prices in 2021? That used to be the sensitivity. That sensitivity has disappeared now. What is the tail wagging the bond dog?
That's why I say fiscal. Because if you look at the term premium we've been building in yield curves, particularly in the U.S., it tells you that there's some concern about fiscal viability down the road, right? And that's why I keep referring to this, fiscal concept. So I would say that's probably the most important for bond markets right now. And on the inflationary side, at least shorter term, I suspect bond markets are a little bit more comfortable. We've seen that in the data as well. I don't think we're as nervous about that. But we do worry about the financing of debt longer term, as we know. And it's a broad concept in bond markets, particularly when it comes to sovereigns.
Janet Yellen and Scott Bessent, I should say, but Janet Yellen specifically before the new administration took control, exercised extraordinary measures on the Treasury market that kicked that deficit story down to July. And yet the market isn't really pricing anything. Even if you look at the short-term forward contracts going into July, you aren't seeing that panic. Is that a dislocation in the market if you say that deficits and the fiscal is really what should be driving the conversation?
Well, we have everything we've seen so far has been more balanced, I would say, in terms of there's been, I think it's very well understood that there's sensitivity in bond markets to additional supply. And so with that in mind, that's why last week I think a lot of the commentary the bond market received was actually quite supportive and calming, if you can say. And so I think going forward, more of that sort of rhetoric needs to be matched in terms of how will the tax cuts be funded down the road, as we get into spring.
So the key question everybody's trying to figure out is, let's go back to the beginning of the conversation. Tariffs. Yeah. The tariffs, if they are put on to derive funding, do they work? Because if they don't, then tax cuts don't work.
Yeah.
The US, and that's where we come back to the fiscal story.
They have to be here to stay for that to be, they have to be sizable and here to stay if you want to create revenue from them.
I thought the math was really interesting around here because this idea of tariffs offsetting tax cuts was fascinating because I think there was an estimate that it was $5 trillion for tax cuts over the next 10 years. And the tariffs on Mexico and Canada, were they to actually stay put, only give, say, the Treasury like $1.5 trillion. So you were still missing, in theory, if this theory really holds, $3.5 trillion. Where does it come from?
So Valerie highlighted a Gillian Tett article in the FT, I think it was from Friday, talking about the idea that the US could revalue its gold holdings, and that would change the narrative around how much it would have to issue, and therefore if you issue less, you're going to see a shift lower that Trump has talked about in terms of the yield story. So he wants a lower 10-year, according to Bessent. How do you get there? Maybe you revalue your gold holdings from, I think it's like 45 up to wherever we are now.
Market to market, there's a big way to go, isn't there? And there's a lot of people talking about the flow of gold as a result from London over to the Americas.
Ella, would that be something, how are you thinking about this?
I read that yesterday, actually, so very interesting article. I don't think it's something that had been discussed before. It's certainly an option. I mean, we obviously have quite a smart Treasury Secretary who knows how to speak to markets. I think markets are giving him some benefit of the doubt. And so this could be one of those potential tools in the toolkit to alleviate some of those pressures on yields. And it's been working so far, if you think about it, right? So we entered the year with much more pressure in yields, and now things have calmed down. So we have to give some credit where it's due, and this could be one of the ways. I don't think it's the only way, right, to pacify those concerns, but it's a way. And
it's creative.
It's quite a creative way.
So, Ella, bonds and gold usually, or traditionally, they've traded in tandem, haven't they? It's that haven bid, it's that safe haven bid from the United States. But if you're worried about the bond market, does that create an inverse kind of dynamic between bond and gold?
Absolutely. I mean, there's, as we know, if you're a bit of a gold bag, I definitely am. I've just revealed it this morning, but there is a place for it in a portfolio for investors, and you see how, particularly over the last couple of years. And so you could argue it's an antidote, right? Particularly if there's concerns over the sort of fiat currencies and so on over the long term. And so you can see that, and it's been playing out. There's also accumulation of gold in reserve managers' accounts. That's been obviously proven by the data. And I think that is for geopolitical reasons as well. That could continue. So that could support bonds, see, obsessed with bonds. But I mean gold, sorry. But also, of course, bonds have repriced. Let's not forget. I need to defend my asset class, I suppose. We've repriced the most, right, over the last 3 years, particularly relative to other asset classes. So also bonds, we believe, offer some value.
Ella, saved by the bell. We didn't even get to Bitcoin yet. Ella Hoxha, head of fixed income over at Newton Investment Management, joining us around the program this morning. Coming up, we continue that conversation. Stick with us. This is Bloomberg.
Welcome back. 30 minutes from the start of the opening trade here in Europe. Let's have a look at the futures picture. And we've had news on the tariff front from President Trump, what he intends around steel and aluminium. We'll get details on that in just a moment. What does that do to our risk appetite? Well, not a huge amount, it would seem. European futures are higher this morning. Euro Stoxx 50 futures up by 0.4%. US futures also higher. NASDAQ futures up 0.5%. E-minis up 0.3%. So not risk off by any stretch. We saw a bit of weakness through the Asia session, but as I say, not wholesale risk off at all. This is the picture across bond markets. We're actually pretty flat on the German 10-year. I was just looking at that, and we did see a bit of a tick up in the German 10-year yield, and you could draw a line between some comments we heard from Friedrich Merz yesterday at that TV debate and that move in bonds. But actually, since I've been talking, that has flattened. So no real movement in the bond markets in that sense. We are seeing a little bit of lower yields over in the United States. Let's get to Kriti to find out what has caught her eye this morning. Kriti.
Well, Anna, we're talking a lot, of course, about the tariff story between steel and aluminum. I just want to put a big 60,000-foot level picture of what that steel market actually looks like, because the major producer out of it is China. 63% of the world's steel comes from just China alone. And then it goes to India, Japan. The United States is actually fourth in line when it comes to being the major producer. This is intrinsically and domestically driving a big debate around one of the major deals of, I want to say, this Trump administration, arguably the Biden administration as well. And that, of course, the Nippon Steel and U.S. Steel deal. This idea that overcapacity from China, too much competition from the rest of the world, has really diluted some of the moves in U.S. Steel. If you look at a stock chart, for example, of the two companies, you will see that neither the Nippon Steel acquisition or takeover offer hasn't actually served very well, because they're trying to put in a lot more investment in U.S. Steel. Over the weekend, Donald Trump saying that acquisition is not going to happen, but they welcomes a small investment that is by no means the majority. And that, I think, is crucial when it comes to what the future of the U.S. versus the steel story actually looks like at a time when they're trying to rescue what has historically been a major player in that space. And this is really the stock chart showing that even with that offer, you have seen both companies really take a hit. From a commodity perspective, though, you are seeing aluminum futures in London only higher by 0.2%. You were talking about this, Anna and Guy, the idea that there is complacency in the market. There's also maybe a little bit of caution in this market that maybe it'll take a couple of days for this to actually show up. But for now, aluminum only higher by 0.2%, Guy.
It's amazing, isn't it? As we've just been indicating, we have seen shares of Nippon Steel under a little bit of pressure. President Trump suggesting it was looking to invest in US Steel rather than making an outright takeover. Just before we get back to the aluminium story, this is what he had to say to reporters on Air Force One on that matter.
I don't mind an investment in a company, but especially U.S. Steel. U.S. Steel for 15 years was the greatest company in the world, the greatest #1 company in the world, and I'm not going to let another country buy it. We had a great meeting on that, but they are allowed to invest in it, and that's different.
They are allowed to invest in it, and that is a little bit different. We'll see how that one works out. It does seem as if maybe that is the route by which Nippon Steel can gain advantage in this narrative. I am surprised we're not seeing a bigger market reaction in the aluminium story. I was kind of preconditioned by what happened with the Russia tariffs, but this feels like a very different sort of story. The market's also been, to your point, Anna, been getting ready for this. It's come a little bit earlier, the aluminium and steel tariffs, but we always knew it was coming.
Yes, and we know that there'll be something bigger on tariffs, don't we? I mean, we know that certain sectors are in the crosshairs. Trump has talked about certain sectors as being of interest. Kriti, we know about retaliatory tariffs, that's something that Trump wants to impose. So all of this comes in the context of our overall expectation of more tariffs, I suppose.
Yeah, it absolutely does. But, I mean, there is still, again, the possibility of these rollbacks. And maybe if there's a day to talk about caution, maybe this is what that trade looks like.
Yeah, it was interesting, maybe this is actually trying to solve a problem, whereas the previous iterations of some of these tariffs was about solving a different problem. But we'll see whether or not you're right, whether this gets rolled back quite quickly. Martin Ritchie's probably the guy to ask about this. A Bloomberg expert on the matter joins us now. Martin, we're all a little confused as to why we're not seeing a bigger market reaction in aluminium, in steel, to these tariffs. Can you explain?
Yeah, I will try to. And as you were just saying, look, these tariffs have been widely flagged, by Trump since before he took office. So there's an element, this was all expected, kind of priced in. Investors are also waiting to see how some of the details pan out. whether there will be, some exemptions to the tariffs. In the past, some countries have been exempted from steel and aluminum tariffs. This time, Trump says it's for everybody. But then, you never know, there might be some room for negotiation, especially when it comes to Trump. So they're still looking for sort of a clearer kind of guide to what actually might happen. And bear in mind, this hasn't really been formally announced yet. We might get at least some more flesh later in the day when a formal announcement is expected.
Right, yeah, so we'll wait for that, Martin, and it could come in with other news around tariffs, of course, which we're waiting for this week. We've seen gold prices going higher on this, indicating there is some sense of risk off, perhaps, as a result of this, but not widespread. What does our 2018 experience tell us about how this plays out, Martin? Or is that not an effective playbook to reference when it comes to these metals?
I think it is quite relevant, to be honest with you. If you go back to the first Trump term, steel and aluminum tariffs, were pretty high on his trade agenda. And if you look at the way he negotiated with, particularly with Canada and Mexico, they were given 25% steel tariffs like all other countries in the rest of the world. But then they were exempted from those tariffs when Canada and Mexico negotiated the broader North American free trade agreement, the broader trade agreement with Trump at that time. So you can kind of see at the moment, with Trump also in the midst of kind of dealing with Canada and Mexico, that this steel and aluminum tariff might also be part of the equation this time. So I think it's part of the broader kind of Trump push to rejig the trade deals he's already made, especially with Canada and Mexico, and probably to a lesser extent with China.
So, Martin, you talked a little bit about Mexico, Canada. We talked about China as well. There are several other countries around the world who are starting to talk about kind of these emergency meetings for exports. I'm specifically talking about South Korea, for example, which is a major exporter. Walk us through some of the other countries outside the ones you just named that might be impacted here.
So if we look at the breakdown of the imports of steel and aluminum to the US, really Canada looms very large in aluminum. Then you've got the United Arab Emirates much lower down at like 9%. And then you've got a whole host of other countries. South Korea is one that's important both for steel and aluminum. Japan also. So they'll be looking to try and understand how they might negotiate around these potential tariffs coming in. Vietnam is another country that's seen its steel exports to the US rise certainly in the last year or two, and that's going to be an interesting one to watch, because I think there's a lot of people in the US steel industry have been eyeing that kind of increase from Vietnam quite closely.
Martin, thank you. Thanks for the update. Bloomberg's Martin Ritchie with the latest on the effects of those tariffs on metals pricing. Let's get a cross-asset perspective. Joining us now, our Bloomberg cross-asset strategist, Ven Ram, with a perspective on the markets. Ven, let's talk about the fact that we are seeing some impact of the tariff story on FX markets, not perhaps to the scale of other versions of this story that we've already seen. But we did see some dollar strengthening. We saw the Canadian dollar losing some ground. We saw the Aussie dollar lose some ground, but then recouping that lost ground on the latter. What do you make of the FX price action?
Morning, Anna. You're absolutely right. The reaction in the markets has been kind of muted. It's not hard to see why. Canada, Mexico, and China are the biggest steel aluminum exporters to the US, as the guests just pointed out, countries against which Trump has already announced tariffs. So the effect of the latest announcement is just going to be incremental. The dollar is up today, but only modestly so. Increasingly, Anna, it feels like the dollar has priced in most of the upside from tariffs, especially if you take the view that this is all perhaps going to stop with reciprocal tariffs perhaps later this week. So despite all this, if you look at the dollar index, it's having a hard time reclaiming the 110 level that it was comfortably sitting at earlier this year. So maybe it has an upside of another 3% from current levels. But the risk-reward asymmetry is completely skewed at these levels, and the dollar is looking vulnerable to profit-taking at some point. So the risk-reward asymmetry is the key to passing the dollar from here.
Ven, good morning. I want to talk about the euro. European gas prices this morning hit a 2-year high. Are we overestimating the amount of cuts that the ECB could deliver? Does the ECB, like other central banks, and it was interesting to hear the Bank of England talk about this, does the ECB still have an inflation problem?
Well, the ECB definitely has a current inflation problem, Guy, because as you mentioned, natural gas prices have been on the rise, and that is going to worry some of the more hawkish elements on the ECB. Now, late last week, on Friday, the much-awaited report from the ECB came through on the neutral rate, and that neutral rate, it pegged the nominal neutral rate at some between 175 and 225. Now, Lagarde already mentioned that range in Davos, and ever since, if you notice her messaging, it's been that, look, we need to look beyond this neutral rate report, i.e. she's kind of seems to suggest that, look, rates are not really going to go below 2%, as some in the markets are speculating. There is, in fact, if you look at the 2025 and 2025 pricing, Guy, the markets are thinking that, the ECB rate will get to 185. I don't think that's going to happen because, we've got a fair bit of policymakers on the governing council who are hawkish leaning, and they think that, anything below 2% will require an imposition of levies and tariffs of a huge scale, one that will cripple the European economy. And as we have seen, Trump is using the levy, the mention of levy, and the topic of tariffs as a bargaining tool. And on Europe, he is distinctly shown an inclination that it's going to be so. And therefore, I think that the euro will be affected positively by this.
Positively by this 103 handle we're seeing on Eurodollar at the moment. Bloomberg MLI's Ven Rom walking us through some of the dynamics in this market. Thank you so much. You get more up-to-date analysis from him and the team. MLIV Go is the function on your Bloomberg terminals. Go now to Paris, where our very own Tom McKenzie is live from the AI Action Summit, where some of the world's key leaders are gathering on the topic of artificial intelligence. Tom.
Kriti, yes, I am, as you say, at Le Grand Palais in central Paris, where President Emmanuel Macron has gathered global leaders, including the Indian Prime Minister Narendra Modi. Also, the Vice President of the United States expected to be here as well in the next couple of days, J.D. Vance, and executives from some of the leading AI companies on the planet, including Sam Altman, of course, of OpenAI, the CEOs of DeepMind, Anthropic, and Cohere. Speaking of which, we will be speaking to a key mind in terms of research around AI from that company, Cohere, in the next couple of minutes. It is an AI startup focused on the enterprise piece. This is about action. That conversation coming up next. This is Bloomberg.
Welcome back. This is the opening trade. Let's head back to the AI Action Summit in Paris, where Bloomberg's Tom McKenzie is standing by. Tom.
Anna, thank you very much indeed. Very pleased to say I'm joined by our first guest of the day, Sarah Hooker, who's the head of Cohere for AI and also the Vice President of Research at a startup that is consequential in the AI space, particularly with the focus on enterprise. Sarah, let's start with the impacts of DeepSeek, the competitive challenge coming through from China. What do you and the team, you have a deep expertise on research around AI. Have you looked at this model? Are you convinced that this is a pivotal moment? Are you convinced, but what they say in terms of the costs that they've used to train their models, how much of an impact are you seeing? And do you expect to see as a result of DeepSeek?
Tom, it's lovely to be here. So I think that DeepSeek is a flashpoint, but it's part of a larger trend. So I lead research at Cohere, frontier AI company. We're really focused on global impact, but also on making this model and technology accessible, putting it into the hands of companies all around the world. This DeepSeek for me was really exciting because my career as a researcher has been about efficiency. So when I started at big industry labs, it was how do we make this much more compact and much more efficient. This is part of a wider pattern where the cost of innovation is going down, which for us is really exciting because it means that we get to experiment and we can focus more on the optimization and customization of these models.
Do you take learnings from DeepSeek and apply them to your own models to create your own efficiencies? And are you looking at reducing your spend on CapEx as a result on things like compute, chips?
DeepSeek raises another flashpoint, which is that a lot of the key things from DeepSeek are reducing the cost of innovation, but also raising this question of data control and also privacy and security. A lot of our emphasis is on making sure that we have full controllability over data, clear data provenance, and also doing private deployments for companies around the world that's focused on security.
Okay. In terms of the regulatory framework, it could not be more stark right now between the US and Europe. The EU AI Act is starting to take hold now in Europe, whereas the Trump administration is slashing whatever AI regulations they had there. What is the right regulatory response, and what does that division and diversion mean for companies like Cohere that straddle both jurisdictions?
We're a global company, and safety has to be the cornerstone of the type of work that we do. So
are you worried by what they've done in the US, rolling back those regulations? Does that concern you?
This is part of a wider issue with the diversity of approaches. Frankly, even if you look at how frontier AI companies have put forward their safety frameworks here at the Paris AI Action Summit, you see a large variety in approaches. Like ours is very focused on immediate risks and harms, things like data and security and having full control, whereas there's others that are much more focused on maybe existential risks, more sci-fi type concerns. We see the same variety of governance. It does point to a real challenge, which is that the more variety you have in approaches, the harder it is to be a global company.
Okay, so you'd like to see, ideally, you'd like to see some alignment when it comes to regulation.
Precisely.
The financial sector I know is important to you. You're about providing services to enterprise and embedding those services. What is the market opportunity in finance for Cohere?
It's huge. It goes beyond finance. A lot of our business is global first, which means that we are considered by our competitors to be the best for languages that business uses every day. We have key partners in Korea, in Japan, and also in countries where it's important for businesses to have models that do well in multiple languages, but also where data is secure. And so this is the key emphasis. Finance just adds all those constraints and amplifies them, because for financial companies, their main concern is they want an enterprise partner that they can trust and they can guarantee the safety of their data.
Are you seeing any of your clients pulling back on spend as a result of DeepSeek and saying, hang on a second, we're not willing to spend this much given we can get much cheaper models?
No, and it's interesting because these moments when a model catches the wider public consciousness, it's almost a whirlwind, because you get this wave of interest, which is much more about the fact that this is kind of like the internet all over again. So no one quite knows what it will look like, but everyone feels like they must be part of it because this is going to impact everything that we know.
Do you feel, when you're on the ground here in Paris, do you get a sense that Europe is behind the curve? Macron yesterday talked about catching up and the need to play catch up. Is that where Europe is right now?
We bet heavily on Europe. So we have staff across Europe. We have one of our key offices in London, and that's partly because the talent is here. We believe strongly in the engineering and research talent, but it's also because Europe is a massive market, and it's really focused on multinational enterprises. It's connected to the rest of the world. So part of why the summit, I think, is very exciting for me personally is this expanded agenda and this focus on innovation, as well as this core focus on safety, but adding this component of, let's be precise, what can AI do for us right now is super aligned with the agenda that we're already working on.
Does it mean more investment in Europe from Cohere?
Yeah, we are building out our staff. We really believe strongly. We have a Paris-based staff as well, so this is already part of our long-term bet.
Okay, Sarah Hooker, thank you very much indeed. The head of Cohere for AI and the Vice President of Research at Cohere, focused, of course, on the enterprise piece with offices in London, San Francisco, and Canada, amongst others. Back to you guys. We've got plenty more interviews coming up from the Global AI Summit, Action Summit here in Paris at Le Grand Palais.
Tom McKenzie, we thank you so much. He'll be back with us soon. In the meantime, let's get a quick check on the stocks to watch. Joe Easton standing by with 8 minutes to the open. Joe.
Morning, Kriti. So BP shares are trading higher on the Tradegate exchange this morning by around 3% ahead of the cash open here in London. This on news that Elliot has taken a stake in the oil major. We're not sure exactly how big the stake is at the moment, but he is said to be pushing for a potential addressing of this valuation gap. We can see BP on the orange line down here underperforming the big rival Shell in London and also other peers, including Total in France. So Paul Singer looking to potentially tackle that underperformance there. Then in terms of a market that's seeing some weakness over in the metals, we are watching a number of stocks given the comments from Trump over the weekend. He's looking at potentially doing 25% tariffs on imports of metals, including aluminium, into the US. So we're going to keep an eye on the likes of Norsk Hydro. Also ThyssenKrupp has seen some weakness on Tradegate today. However, the caveat is that we are seeing a pretty steady base metals market this morning. Aluminium up around 0.1%, not reacting on the base metals, but we are seeing some calls lower on the individual names. Then in terms of Nokia, we have, of course, had that breaking news of the CEO standing down, being replaced by a 25-year veteran in the industry who's coming over from Intel. Now we can see Nokia has actually rebounded over the past year, up almost 40%. But on a longer-term basis, it is down pretty sharply since the highs back in 2020. There is, of course, a big battle going on between the company and Ericsson for the key telecoms contracts over in the US. So we can see it coming down on a 5-year basis, still higher, but down from that high we saw back in the pandemic. Keep an eye on Nokia over in Helsinki today.
Joe, thank you. Joe Easton from our equities team with a look at some of the stocks in focus. And certainly we will keep in mind what he said there about Nokia, as we'll be speaking with Nokia. We have an exclusive interview with the incoming president and CEO, Justin Hoxha. That's at 8:50 a.m. UK time, so that'll be on this programme. Coming up, we'll bring you the opening trade. This is Bloomberg.
Monday the 10th, a couple of minutes to go until the opening trade here in Europe. Fridays and Mondays are increasingly feeling divorced from each other because obviously you have whatever Donald Trump likes to put in the middle to affect the Monday trade, which didn't affect the Friday trade. Friday's trade, though, was affected by the payroll number, which was interesting. At first blush, it looked weak, but then you looked at the revisions. There was some interesting stuff out from Torsten Slok over the weekend as well from Apollo, talking about the fact that actually the fires may have had an effect in the California number. So kind of think about all of that. Anyway, you can see the effect of all of that Friday. Plus, I think there was some expectation on tariffs. So we go out here in Europe. It's not much of a steer from there in terms of how the European markets are going to open. And it's interesting to see the futures, Kriti, are actually positive.
Yeah, I think that bit in the middle is called the Sunday scaries, at least for me. But when you look at the futures picture, you're not seeing any evidence of that. Eurostoxx 50 futures actually flying this morning, higher by 0.4%. Just like that last hour we've been on air, you've rarely seen futures pick up on some of the momentum. The FTSE 100 seems to be the laggard there. I'm curious to see how some of the sector pieces are going to show up. Anna's going to dive into that in a moment. Higher by about 0.2%. A similar margin, though, Anna, for the CAC 40.
Yeah, absolutely. It's a number of individual stocks and sectors in focus then, Kriti, as you indicate. So BP, certainly one we'll be watching. We've seen Elliot Investment Management taking a stake here. What kind of change are they going to be pushing for over at this business? Might we see asset sales faster than they had already been planned as a result of this? We will keep an eye on the metals stocks, anything that looks as if it could be impacted by the new tariffs then on aluminium and steel production. So ArcelorMittal, ThyssenKrupp, both of those names and others will be in focus for us. And Nokia, with a change of management, Guy, we'll be talking to the man who's coming in to take over a little bit later in the programme, and we'll watch the share price at the start of trade.
Absolutely. That stock has been on a roll for the last few months, 52-week high after 52-week high. Does that continue now? Let's talk about the opening trade Monday morning. A number of different factors to price into this market this morning. Doesn't look like equities are going to be the main mechanism by which that, though, happens. You look at the FX story, maybe look at gold, look at what's happening in the bond market. So equities largely become the FTSE 100 going nowhere in a hurry right now. We'll dig into the details. We'll see what BP delivers in just a moment. Take a look at stocks like ThyssenKrupp as well. They're going to be fascinating once the DAX opens as well. The IBEX is barely budging. The stock 600 is up by 0.1%. The FTSE 100 is absolutely unchanged at the moment. At an index level, Monday morning feels quite quiet, but other things, I assure you, are going on. Let's dig into the details. Kriti, what are you watching?
Well, we should kick it off by saying that I'm not immediately seeing a pricing on BP yet, so we're going to wait to see when we do ultimately get that. But at the moment, it is broadly positive when you look at it from a sectoral picture. The kind of hindrance, though, I think, is in basic resources. And I think that's interesting because it's now finally showing up, perhaps, in the equity market, that we didn't actually see as much of a reaction in the commodity market itself. And the basic resources sector down about 0.3%. Is that the tariff reaction we've been waiting for?
Yeah, absolutely. So ArcelorMittal down by 2.3%, Norsk Hydro down by 2%. Guy, you were mentioning some of these names a little earlier in the programme. So we certainly are seeing some impact there. That's at the downside. You point to that, Kriti, as, yes, the downside of the tariff story. Consumer products and services also not having a great day, but only a couple of sectors actually in negative territory. And the rest of the market does seem to be broadly positive, even if the Stock 600 only up by 0.2%. But real estate is the best performing sector, that and technology stocks this morning.
So where do we go from here? What does this week look like? Are we waiting for the data? Are we waiting for Powell to speak? What is it that's going to provide the catalyst? We've got these universal tariffs, I'm calling them universal tariffs, potentially coming on later on this week. A quietish start, affected by the tariff narrative, but it does feel as if we're going into a week that has volatility.
Or if they're just retaliatory tariffs and they're not as big as universal, maybe that's where we focus our attention. I mean, yes, lots of guests tell us that the thing we need to watch is the White House agenda. I wonder how the White House agenda meets the war in Ukraine this week, and to your point earlier, Kriti, about the Munich conference on Friday, and that proved last week it can still move markets.
Yeah, absolutely. I wonder how this is all going to show up in the DAX. Of course, we are still waiting for the opening trades around that because, of course, the steel and aluminum story is going to be affecting the defense sector as well, which may also be trading ahead of that event. I should mention again, we're still not getting the fresh pricing on BP at the moment, but we will bring that to you as we get it. In the meantime, let's go to our markets guest this morning. John White, founder of European long-short hedge fund Calibrate Partners, joins us around the table. You picked a very exciting morning to join us because we're sitting here, we're waiting for where all the market reaction is. But I think you're almost the perfect person to join us this morning in terms of your hedge fund strategy, because how do you play a morning like this?
Well, it's very difficult to play it retrospectively, but I think it's fair to say that when we look at the backdrop, and I think we all accept Europe from a valuation perspective is very cheap, cheaper than it's ever been, arguably, against the global peer group, certainly on a sector-neutral perspective. So I think there's an acceptance that Europe is cheaper than it's ever been, and the question I constantly get asked is, what's the catalyst that changes that? And I think that links very nicely to your BP point, which is, there are a number of catalysts, and M&A is one of them, and activist shareholders are another. And to see Elliot take a stake in BP is going to get the market thinking about where else this may happen.
Well, you tell me, where else might it happen? I mean, is this an effective strategy? Guy was making the point earlier in the show that the idea of breaking up a company basically is kind of being well received. You saw that in GE in the States, you saw it in Honeywell last week as well. Is that the new kind of route to success when it comes to capturing a market reaction in Europe?
I think it is, actually. I think it is. I think that European investors have struggled to wrap their arms around the valuation discount that we've had for a long period of time now. And I think it's fair to say that now we can see capital allocation shifting. And I think Trump has added a risk premium dynamic that needs to be digested in the US. And I think, I was saying to Guy earlier, I think that Europe could be the ultimate winner in the blueprint of Dodge in the context of bureaucracy, red tape, and just general cost savings, because Europe is, as we all know, the world's leaders of bureaucracy and compliance and legal. And I think that that's starting to be thought about in a different way.
Yeah. Just to pick you up, good morning to you, John. Nice to see you. Thanks for coming in. Just to pick up on that point, because I know you're quite a fan of what you see from the Doge department in the sense of trying to take costs out and rationalise that system. I'm sure there are others who would agree with that view, but just to put the counter, I mean, it's up against a lot of legal challenge in the United States right now. Is there a sense that move fast and break things tech mentality, when applied to government, is going to rub people up the wrong way?
Well, I think that's true.
I'm interested in
I think that's
that,
true.
because
I think that's true.
That could also be the case in Europe.
I think that is the truth in Europe, and I think that Mario Draghi wrote a famous report in September of last year, which really framed all of this in the context of where Europe is struggling, and what could be done and how it could be fixed. And I think that it's, we've seen what Milei has done in Argentina as a bit of a blueprint, and I think we can all accept that what Musk is trying to do is the ultimate global blueprint for running an economy or a country more like a business. And I think that will feed its way through into thinking and capital allocation and the way that governments and policymakers think about Europe, because I think there's a general acceptance now, whether it's Lagarde or even now our very own Rachel Reeves now, that growth is far more material to to where we land.
We've got the BP share price is open now, up by 5% at this point, up by 5.3%. So some expectation there, perhaps in markets, that we get some changes pushed for by this activist investor. And the other story we're dealing with this morning is the tariff story, but this is, I don't know, iteration number whatever of the tariff story. Do you sense that markets are learning a little more how to deal with this, what to price in and when, how much of a knee-jerk reaction to give to these kind of stories?
I think they are. I think certainly from our perspective, we start to think a little bit more about how central banks react to this. And I think what we see in the yield curves and how they're shifting from a US perspective versus the rest of the world, and certainly Europe, is it's pretty meaningful, because Europe is going through a rate cutting cycle. So we're starting to see a steepening of yield curves, and the front end's going to be, it's going to trade lower for sure. Whereas the US is in a slightly different framework now, because tariffs are slightly inflationary, and Powell is stuck in this sort of, neutral ground now, where he's data dependent. But I think the yield curve in the US is probably going to remain pretty flat, stroke inverted, which is ultimately not great for consumption when you think about how households price their mortgage debt. Whereas in the UK and Europe, where we have much more debt at the front end, being 2 and 5 year, particularly in the UK, it could be a bit of a tailwind. It could be something that helps Rachel, for example.
Europe is definitely outperforming year to date from an equity point of view. Just coming back to the kind of reasons for that, Europe could be a cool spring. You've got the Ukrainian thing, which is going to help potentially later on this week, so potentially we get a deal coming through there. That could certainly help out. Beyond that, what gets Europe moving, though? Because at the moment, it feels like the US economy is re-accelerating and the European economy is slowing down. This morning, gas prices are at 2-year highs. There's plenty of impediments for the European economy. How much? I keep getting sucked into a January effect for the European markets. We're into February now. Does it continue much longer?
Well, look, I think, I go back to the Elliot BP situation. I mean, there's probably, one step removed from where we raise capital from the big global asset allocators. Whether they be in the UAE or the Middle East or particularly in the US, they don't own Europe. And there's definitely an acceptance now of this valuation discount, and things like this, with BP will make people scratch their heads in terms of their underweight Europe.
It's enough to get people, because every time I talk to a US investor, they're like, I love Europe, looks cheap, can see the reasons, but there's more compelling reasons to be in the United States. How high is the bar to keep the money moving? Because at the moment it feels like, actually, weirdly, it's the US investors moving money into Europe. It's actually not domestic investors that are putting money in. So does that continue?
Well, interestingly, US households own more equity than they've ever owned in the history of time. And European households, including UK households, are at an all-time low in terms of equity ownership. So I think this is a channel that needs to be explored to an extent from policymakers. But I think it's fair to say that the valuation discount is something that people do accept, investors do accept.
Feels permanent.
Well, it's certainly been in place since 2009, and I think this goes back to our point about regulation. Europe has regulated itself out of existence, and the UK too. So, there's a whole bunch of capital inside CTAs that is very momentum-driven, linked to earnings. And we've seen, just in recent months, we've seen earnings momentum start to accelerate in Europe. And I think it's very important to make that distinction, that we're investing in company earnings, not corporate GDP. And they're two very different things. And when perception and reality start to diverge in the way that they're doing right now, it does catch a lot of people on the wrong foot. And bizarrely, I think if Europe continues to outperform, it will suck in more capital from other jurisdictions.
Is it earnings though, or is it buybacks?
Well, it's both. I mean, when you think about your cash return or your total yield, it's both, and that's what investors really care about.
Yeah, I suppose so. Okay, so we talk a little bit about the regional perspective. You are a long-short fund manager, of course. What is the most crowded trade at the moment in your eyes?
Long the Magnificent Seven.
So you're shorting that? That's a pretty expensive short.
Well, there are many ways to short these types of things, and it's underperformed. That category has underperformed the market now, 6 or 7% year to date. So it's not that expensive to run. And I think you had Chain also in here recently. He was talking about the basket that one of the investment banks puts together, which is the most shorted stocks in the US. And he was arguing that that's underperformed the market since the meme stock frenzy in 21. That's underperformed the market every single month since 21. Yep. So I think there are many ways to find shorts, and we're a market neutral strategy, so we just need to find stocks that are going to underperform the index.
To be fair, Nvidia is down year to date.
Yeah.
I mean, it's been 5 weeks.
I know, but
these people have, demanding a short space of time.
Fair enough.
What excites? So you see opportunities then because they're undervalued in Europe.
Yes.
Then, John. So what do the best opportunities right now look like in Europe?
Well, I mean, we've said this every year for 3 years now. I think the bank sector is probably the one that we come back to, where we've got best earnings visibility. We've got, I think we have a regulatory tailwind. And we've got a government tailwind in the context of trying to create economic activity. And I think that, here are big institutions with big cost base that should benefit enormously from generative AI as this starts to roll out.
Yeah, you got to kind of persuade big parts of government that it wants to accept that and use it and derive the efficiencies from it. And
that's true.
That could take a while.
Yeah.
John, great to catch up. Thanks for joining us. Come back again. Thank you very much. John White, founder of Calibrate Partners. Let's talk about the Core 6, figure out what is happening here. ASML has gone ex-div this morning. Just be aware of that when you look at the screen in front of you. You need to price that back in. The AI trade does seem to be on the front foot. Schneider is up by 1%, though. The data centre story. We're going to talk Nokia as well very shortly. Luxuries back on the front foot. LVMH is tracking higher. Nova's a little softer this morning. Let's get what else we need to be watching. BP obviously front and centre. Here's Joe.
So we are seeing a big move in BP, Guy, at the opener, trading up almost 7% now for that stock. Now, that will be the biggest gain in 2 years if that stock holds on to those gains throughout the session today. Activist Elliot building that stake. As we say, we don't know exactly how big a stake he has taken in terms of Paul Singer in that company, but it is just the fact that they are looking at that company now that is moving that stock higher this morning for BP. A decent mover on that one. Then an area we're seeing some weakness, of course, is over in the metals markets as Trump says he's going to do 25% tariffs on metals coming into the US, and therefore we're seeing weakness in ThyssenKrupp, Norsk Hydro as well. That one was a little bit weaker than that on the Tradegate exchange. We might get another price on that coming through, but also some of the miners as well. Anglo, Glencore slipping in terms of the reaction to Trump's comments coming from Air Force One over the weekend. Then in terms of Nokia, a pretty steady reaction to news of the change in CEO there, and the producer has kindly just told me that you guys are going to have the CEO on the show later in the programme, so we'll look ahead to that. But at the moment, the stock is holding steady. The CEO, the change in CEO coming over from Intel, a 25-year veteran of Intel, or the industry at least, is coming to the company there. Then in terms of the broker moves, the analyst changes, IAG downgraded at Goldman Sachs. Now, that is a big one because that is a favourite on the street for the airlines. But bear in mind, IAG has risen more than 150% since Goldman upgraded it in January last year. And they say the rest of their airlines coverage has actually declined during the period. They therefore don't see as much value in the owner of British Airways. So they come down to neutral, and that stock sliding at 1.6% in London. And then finally, in real estate today, an interesting note from Morgan Stanley on self-storage, saying that self-storage isn't as popular as it was a couple of years ago. People not storing enough of their stuff in those big containers, and therefore they downgrade a bunch of stocks in the real estate space in storage. SafeStore, one of them, and that stock is declining at 1.5% on the London market this morning.
Thank you, Joe. Joe Easton from our equities team with those movers. Coming up, investor Elliot takes a significant stake in BP as it looks to shake up the struggling oil major. We'll bring you the details next. This is Bloomberg.
Welcome back to Monday morning. European equities are a little higher. We're up by around a third, as you can see, pretty much across the piece. We've got a lot going on this week, and we've got to think about kind of what is going to provide the volatility. What is interesting at the moment is that the tariff story, aluminium, steel, not providing that much volatility. It's showing up a little bit in equities, names like ThyssenKrupp, etc., on the move this morning, Norsk Hydro. We need to stay in the commodity space for our next story as well and talk a little bit about what's happening with BP. That stock is up by 7.5% right now. Bloomberg learning that Elliot Management, run by Paul Singer, of course, has taken a significant stake in the British oil major. Sources say Elliot wants to boost the value by pushing the energy giant to consider transformative measures. What will they look like? Let's find out. Bloomberg's Will Kennedy, Executive Editor for Energy and Commodities, joins us now. A significant stake, some significant developments. What could come of this, Will?
The accelerator change in strategy, which was already happening, at least slowly. It really means, I think, the death knell for the radical transformation program that the previous CEO, Bernard Looney, put in place a couple of years ago to really transition the company away from oil and gas and towards renewable energy. We've already seen the current CEO slow down that process, rein in those ambitions. And I think Singer is likely to push on that further. Whether he wants to shake up the board, that's a possibility. The chairman's been there for a long time. And whether there are parts of the company he would like to divest and split off, that's another possibility. But we haven't heard from the hedge fund about exactly what they plan to do. I suspect they'll be talking to the management team in the days ahead.
Will, can you just walk us through and put us into perspective here of why they need to potentially do this in the first place? Why a spinoff is even necessary, or even a break apart, excuse me, is even necessary when it comes to this business?
BP's underperformed, put simply. It has fallen 8% in the last couple of years. Its peers, especially Shell, the bigger UK oil major, has risen almost a third in that time. And I think that Singer and Elliot see an opportunity here to get more value from the company. There are some very strong underlying businesses inside BP. It has one of the best oil and gas trading businesses in the world. It has an enviable position upstream in the Gulf of Mexico. It has an LNG business, which people like. So I think that investors see value there, but they want to change a strategy and refocusing to close that performance gap with its competitors.
Yes, and when are we going to get further news on this then? Well, there's plenty of opportunity just within the next month, isn't there, to hear from the business, I think, tomorrow and then later.
That's right. I think by the end of February, we'll probably all be bored of talking about BP. Tomorrow morning, we get their fourth quarter results. They're expected to be quite weak. We've seen other oil majors report lower earnings on slightly weaker refining margins. In particular, from a year ago, we expect BP also to report lower earnings, but perhaps more significantly, the CEO, Maria Alkenschloss, was already planning a strategy capital markets day on February the 26th. That was meant to be yesterday. It was delayed by 2 weeks because he's had an undisclosed medical procedure. So that happens on February the 26th, and that will be his chance to put the strategy to investors. Whether he'll sharpen that up after the Elliot news over the weekend, we don't know, but we expect, again, a refocusing on the core oil and gas business.
Well, thank you. Bloomberg's Will Kennedy, Senior Executive Editor for Energy and Commodities, for the latest on BP. And that share price up by 7.3% this morning, as Guy was indicating, a strong reaction. Is that just expecting tweaks from Elliot or faster movement or anything bigger, even, wholesale takeover? We'll watch that one with interest. Now, it is a busy week for banking and luxury earnings. Joining us now to look ahead to the events that we're going to be focusing on this week from a corporate perspective, Bloomberg's Chloe Melly is with us on set. Good morning to you, Chloe. Let's start with what's going on in the banking sector then. What are we expecting from UniCredit and Commerzbank? The takeover saga continues to develop.
Yes, it does. So tomorrow, UniCredit will start us off with this busy week for banking earnings. The focus there will be kind of beyond earnings and more on the capital position and the balance that UniCredit decides to strike between using that cash to pursue deals. Obviously, we've got BancoBPM and Commerzbank in mind, or using that cash to fund shareholder returns. On the flip side, we've got obviously Commerzbank reporting a couple of days later, and there the focus is on trying to convince shareholders that it can deliver value as a standalone entity. That is complicated by the fact that we've got this context of lower interest rates and a recession in Germany, which drags down the earnings and really pushes up the cost of risk. So that kind of complicates matters for Commerzbank.
UK banks, net interest margin, is that the focus? What else should we be looking at?
So net interest margin is the focus. So we've got Barclays and NatWest this week, and they have benefited from a slower pace of rate cuts, which protects margins in the UK. For Barclays, which reports on Thursday, the focus is also on the investment banking performance, which should be quite solid. So analysts expect Barclays to kind of beat revenue expectations and be really solid across the board. And NatWest also has this tailwind from slower pace of rate cuts.
So you go to the banks, you deposit your paycheck. Naturally, you got to go to the stores next.
Yeah.
Walk us through the luxury space.
So we've got Kering and MS this week. Usually those two are kind of sit at opposite ends of the performance spectrum with the luxury market. So MS is traditionally quite resilient, and it will probably continue to be. For Kering, it has had a few kind of tough quarters, but it might be turning a corner in 2025. That is due to the beginning of a recovery in China, but also a stronger US luxury market. We do have to keep in mind that the creative director of Gucci, which is Kering's flagship brand, departed recently, which kind of puts into question the strategic direction for the company and specifically Gucci.
Certainly something we're going to be keeping a very close eye on. I'm sure you're going to have a very busy week as well. Bloomberg's Chloe Melly walking us through, of course, the banking story and the luxury story as well. Speaking of all things French, we should mention that we are getting live pictures at the moment of J.D. Vance, the Vice President of the United States, landing in Paris at the moment for the AI Summit. Our very own Tom McKenzie is on the ground with an all-star lineup. This conversation about investing in AI, France taking a page out of the Trump playbook.
Yeah, and we're waiting for J.D. Vance then to deplane, to get off the aircraft that we see on the pictures in front of us. He's going to be having a range of bilateral conversations. The focus is, of course, on tech and AI at the AI Summit, but there'll be an opportunity for bilateral conversations with world leaders there. And then he goes on to talk security in Munich later on in the week.
So we haven't actually heard very much from J.D. Vance so far, which is understandable. He's the Vice President. You're not really meant to hear very much. But I think a lot of people are waiting to figure out what he thinks about a number of big subjects. And I wonder whether we'll get clarity on some of that this week.
Well, he used to be a Silicon Valley guy to begin with, so it'll be interesting that this is the guy, that this is the envoy that Donald Trump has sent, because some would argue that the vice president to the AI Summit in France is also a very high title and high position to be sending to something like this.
Yeah, and there are some world leaders in attendance. I think Narendra Modi is there, isn't he? So there are some big names, and we'll be back there shortly. We'll be back in Paris. We'll be speaking to the head of one of the fastest growing voices in AI out of Europe. That is Mistral AI CEO Arthur Mensch. That conversation shortly. This is Bloomberg.
Ganz wichtig, dass wir die
We should not delude ourselves. What the American president says, he also means. And some people are quite light-footed and say it won't turn out that way, which is why I think it was important that I was the first head of government in Europe to say after the discussion about Greenland, this is not how it works. We are defending Ukraine because we say that borders must not be moved by force. But of course, that applies all the more to our partners.
Recht für unsere Partner, die dürfen das auch nicht machen.
Well, he's predictably unpredictable. Most of the things he is saying now are not new. He has repeatedly spoken about them before. There are significant concerns on this side of the Atlantic about what else is coming, so it's all the more important that we, on this side of the Atlantic, are as united as possible.
Reagieren.
German Chancellor Olaf Scholz and Conservative frontrunner Friedrich Merz in a TV debate 2 weeks ahead of Germany's snap election. That taking place just over the weekend. For more on the German election, let's go to Bloomberg's Oliver Crook in Berlin for an important conversation. Ollie.
Yeah, that's right. And I mean, listen, of all the many issues that are facing the German economy and German politics, chief among them is going to be the question of defense. And so we're very pleased to be speaking to Markus Faber, who is the head of the Bundestag Defense Committee. He's a senior FDP lawmaker, and he joins us now here in the studio. So we heard from the candidates last night. We heard from Olaf Scholz saying that 2% is the right amount of money to spend for NATO. Merz is saying 3% is perhaps more realistic. Donald Trump wants 5%. You sit at the chair of this committee. How much money do you think Germany should be spending on its defense?
I think we have 32 NATO partners over here, and they are talking whether 2% are enough. 2% is a number that comes from 10 years ago. The NATO General Secretary Rutte was in Berlin 2 months ago. He also came to my office, and he was pretty clear that we are more looking for 3%, maybe 3.5%. So I think 3% will be the new floor. And our German Bundeswehr also have a lot of old equipment that we have to replace. So it's good money to spend there.
And in the question of spending money, of course, this is one of the key issues for the FDP, particularly on the question of the debt brake. Would you be in favor of getting a fund that's outside of the budget in order to ensure that the right amount, the right volumes of money are spent on defense, getting around the debt brake?
Our Supreme Court has been very clear that this is unconstitutional. So we have a normal budget, and everything that we are doing when the next year comes have to be in this normal budget. So a special budget just for a special situation. This is not a special situation.
Well, the Russian invasion, the argument, the Russian threat would be the special
It's not new.
Right.
It had happened 3 years ago.
In terms of sort of collective defense efforts across Europe, there's a lot of conversation about this in terms of basically potentially getting procurement across other countries to get more efficiency, to bring the cost down of military equipment, more efficiency there. Is that something that you'd be in favor of? Do you think we could get the mechanics worked out? And also on that, would you be in favor potentially of joint debt among European partners in order to get that defense spending up?
There are good news there. The European Union is looking for such a thing. Marie-Agnes Strack-Zimmermann was head of the German Defense Committee before me, and she is now head of the European Defense Committee. So they are looking for common procurement, common research programs. So the European Union is just building a framework for such issues right now. A joint debt? No. When we have to pay for something, we have to pay it now. It's not for the next generation to pay for it.
And then the question of sort of German industrial decline. The auto sector is in a great deal of trouble. Chemical sector, steel. We know all of the problems. Do you think there's an opportunity for Germany to become a sort of military industrial hub within Europe, particularly as all these NATO allies want to buy European products? Do you think that could be Germany?
That's happening right now. So the industrial capability when it comes to military equipment is just building right now. It's also American industry that is coming to Germany to build air defense rockets right now here in Germany, in Bavaria, and other issues as well. So this is happening.
And the question of sort of the Trump doctrine, we have to talk about Donald Trump. It's an unavoidable topic, I think, for everybody, particularly in the German election. When he calls into question the sort of alliances in NATO, he talks about potentially military action in Greenland. You chair the Bundestag Defense Committee. When you hear that, how do you view that? Do you see the U.S. as a reliable partner?
Especially for Germany, it's very important that our partners are not invading other countries. So Greenland is a part of Denmark, and Denmark is a partner for us. So it's very important not to talk about military action from one NATO partner against one another. We are saying this to Turkey, looking on Greece, to Greece, looking on Turkey. It's the same issue for the US.
But does it change your view about how Germany and the Europeans should position themselves vis-a-vis the United States? Should there be a sort of more united front that gets to be a sort of more serious issue, particularly on Greenland?
I think Europe has to be united on that. We are united against the Russian invasion of Ukraine, and we also have to talk very clearly to everybody that talks about invading other countries.
Okay, well, Markus Faber, thank you so much, Chair of the Defense Committee and the Senior FDP lawmaker, and we wish you good luck on the campaign trail. I'll send it back to you in London.
Oliver Crook, we thank you so much. Let's go from Berlin over to Paris. We're at the AI Action Summit in France. Let's talk to Bloomberg's Tom McKenzie, who's standing by with a very special guest. Tom.
For the audience for this. Yeah.
Kriti, thank you. Really one of the stars of the show here at the AI Action Summit at the Grand Palais. It is Arthur Mensch, who is the CEO, co-founder of Mistral, which is really not just a French large language model, foundation model leader, but also a European leader, so central to these efforts around sovereignty. Arthur, thank you for your time. I want to talk to you about the enterprise piece and the consumers piece and the impacts of DeepSeek regulation. But let's start with Le Chat. You've launched an app recently focused on the consumer when typically you've been focused on enterprise. What does this tell us? How much demand are you seeing for the app What kind of download numbers? How successful has it been so far?
Thank you for inviting me. Le Chat today is the #1 on app stores in France, and it's been there for around 3 or 4 days, which is we launched on Thursday, and it's been on the top of the chart for the last 4 days. So that's a lot of downloads, that's a lot of load on our servers as well, and so we're very happy of the launch.
Talk to us about DeepSeek. What are the implications? How significant is this moment?
Okay, I would say DeepSeek is a great news for open source AI. We've been a promoter of open source AI. Everything that we've done, in particular the sparse mixture of experts model we released last year, has been used by DeepSeek to actually make better models. And today they're contributing back. And so for us, it's great news. We've always been promoting decentralized AI that every enterprise actually owns, which goes against the closed source approaches that a few US enterprises have. And so for us, I think it's a great news, and we're going to be continuing to produce even better models that are open source.
So you think DeepSeek is more of a challenge for the likes of OpenAI and Anthropic, the US players versus European players versus you at Mistral?
I think what it says is that open source models are making things much cheaper, and that overall it doesn't cost you $10 billion to make an application that people love, and to make technology that is useful to everybody. So in some way it lowers the bar, it makes it much easier to compete, it makes more efficient company like us that allows us to enter the game much more easily, and that's how we've been creating the company for the last 2 years.
And yet Google and Microsoft and Meta are still pledging to spend about $300 billion on data centers and on chips this year. Does that spending make sense?
Well, that spending is going to make sense if we manage to make AI useful. If we manage to make AI applications useful to enterprises and AI applications useful to consumers. That's the reason why we're working with Cisco, for instance, in the US to help them get like 20% productivity gain on customer experience. And so yeah, as long as we can produce not only the technology but the applications, we're going to be able to have more inference, and that justifies the spending that hyperscalers are making today.
And you said that DeepSeek learned from some of your models. Do you believe them when they say they used older chips? Because some industry insiders have told us they think they're actually using more sophisticated NVIDIA chips than they've actually let on, and be honest about.
Actually, I don't have intelligence on that. What is sure is that they're able to use the chips they have to make great models. And what is certain is that it doesn't cost that much to make great models. The level of efficiency that DeepSeek has, we also have. And so if you think more, if you spend more human resources on what you're doing, if you have potentially more constrained resources, you can make a better job than if you have immense resources and stop thinking about what to do efficiently.
You've named some of your corporate clients there. Veolia in the waste management, water management is another example. Have any of those clients pulled back, or at least expressed caution to you as a result of DeepSeek and saying maybe we can get this cheaper than even what Mistral is providing?
Definitely not. They're really looking at companies that can serve open source models and help them get to the application level. Because if they just get like the Mistral models or the DeepSeek model, they can't really build anything on it. And so what we build on top of it is really the orchestration platform, the deployment platform that allows us to deploy our open source models, but also other open source models, and all of the applications sitting on top. So Le Chat as an enterprise version that is actually very useful to our customers. So in general, no, they are just more excited by the space of AI, and we're excited as well.
Do large language models become commoditized in coming months?
Some, like the text-to-text model, part of it is definitely getting commoditized, which means it's easy to get, but it's pretty hard to deploy. It's pretty hard to make an applications on top of it. It's pretty hard to get the right interface to humans. So everything that sits on top of the models is not commoditized at all. And there's also a big fraction of what we're doing on the model side, which is not commoditized. If you look at vision models, for instance, the ability to view and to produce text on top of that. If you look at audio models, these are not commoditized at all, and that's areas where we are investing.
What does the stark difference in regulation between the US and Europe mean for Europe's position in AI?
Well, we don't think that regulation is too much of a problem. To be honest, we can work with it. I think the real challenge, and I think the real opportunity that Europe has, is that the European industry should partner with the European startups to actually make groundbreaking technology. And so we have leaders in all verticals in Europe. And the only thing that is missing for them is to adopt AI at a faster pace, and we're there to help them.
You said in a newspaper report yesterday that you'll be investing billions of euros in a data center in Paris. Where's that funding coming from? Are you looking to raise additional funds this year?
Of course, as a startup, you're always, I guess, queried to raise some funds. So that's definitely a topic that is on our mind. This money is coming from our previous raises. It will come from our next raises. And yeah, it's in France. It's a great occasion for us to make the investment we've done trickle down to data center operators, to every part of the value chain that is sitting below us. And so for us, it's a great occasion to make a very carbon efficient cluster as well.
And you told us in Davos that an IPO was part of the plan. Can you give us an update on the time frame?
So I never said that. I said that we were an independent company. I said that as an independent company, the natural path was to get to an IPO at some point. But that's obviously not something that we're looking short term. We're focused on shipping. We're focused on making good products, on improving the technology, and that's very much what is on our mind.
And the revenue target for 2025?
I guess I won't disclose it, but it's we've doubled it this quarter, and so we're looking at trying to triple it or multiply it by 4 in the coming year.
Arthur, thank you so much for your time. Arthur Mensch, an absolutely central player, of course, in the AI Action Summit here in Paris, the CEO and co-founder of Mistral AI. Guys, back to you.
Tom, great stuff. So much came out of that interview, so much to think about. The line that really stands out to me: if you have unlimited money, maybe you don't do things quite as efficiently as you could. We're talking, of course, about some of the US players there. A nice little hint at what is happening stateside. Coming up, an exclusive interview with Nokia's incoming president. We're going to talk the AI trade there as well. Is this a data center trade? Justin Hotard is the new CEO of Nokia. He's in a few minutes' time. This is Bloomberg.
Welcome back to the opening trade. 45 minutes into our trading session for this Monday, the 10th of February, and we have modest gains across European equity markets. On the downside, we saw some basic resource names being hit by tariffs announced or mentioned by President Trump, at least. On the upside, though, lots of talk around activist activity at BP pushes that share price higher. We also have, then, Guy, the share price of Nokia higher by 1.3% this morning.
Yeah, Nokia has hired a new CEO. Justin Hotard is coming in from Intel. Pekka Lundmark is outgoing. Justin steps into the role on April the 1st and joins us now for an exclusive conversation. Justin, congratulations. When did the conversation start? When did you first think about this as a potential?
Thank you, Guy. This was an opportunity that developed over the last few months. And as I spent time with the chairwoman, Sari, and members of the board, and obviously spending more time deeply understanding the company, I just became really intrigued with the company and the opportunity it has in the AI era.
You're a data center guy. Is Nokia now a data center company?
No, Nokia has a broad technology base, and I think that's what's so compelling. You know, obviously, a strong core in mobile networks and core networks, and in fixed network infrastructure, optical networking and data center networking, as well as a very strong patent portfolio through Nokia Technologies. And so I see all of the assets as very core to our obviously to our current business, but certainly looking at the business to future growth opportunities.
Justin, good morning. You're clearly getting up to speed with the business very quickly. Can I ask you about the 5G side of things? You come with experience from the United States, of course, and there was recently some disappointment at Nokia over not winning a particular contract over in the US on 5G. How much of a priority is it going to be for you to win more 5G contracts in the US?
Well, look, I think it's important for us across all of the markets where we play in 5G to continue to win share. You know, we've got a very strong competitor in Ericsson, obviously, and then we have competitors in Chinese competitors in portions of our markets. My focus coming in, though, is going to be to spend time with all of our major stakeholders, and one of those will be our customers, and particularly our telco customer base, to understand how we're serving them well and what we can do to continue to serve them better and drive growth.
And perhaps it's a little too early to ask you this question, but I'll give it a go anyway, Justin. Our colleagues have been reporting that perhaps the mobile network business could be attractive to Samsung, and I wondered if it's up for sale.
No, this is a core asset of the company.
So it's not up for sale?
Now, as I said, it's a core asset of the company. It's a core part of our business today.
But Justin, does that eliminate minority stakes as well, or even investments from other companies?
Well, Kriti, I think the key thing for me is I'm going to spend time coming in when I start on April 1st, and I'll spend time, as I said, spending time across the employee base, customers, shareholders, other key stakeholders, and that will inform some of the decisions I take going forward. But right now, my focus is going to be on listening and learning and understanding what we can do to accelerate growth and maximize the value creation for our shareholders.
Well, Justin, let's come full circle to where Guy started the conversation on the AI space. We know that you come with quite a bit of experience in the Intel side as well. We also know you've been spending months transitioning to this role, and we'll have that guidance in the months ahead. Intel didn't have the best track record for meeting its AI and data center goals that it did. Can Nokia get that right? And what can you do at Nokia that maybe you couldn't do at Intel?
Yeah, and I would just emphasize I spent about a year at Intel. Prior to that, I spent 8.5 years at Hewlett-Packard Enterprise building our AI business, as well as driving our core server business across enterprise and cloud customers. And what I've found in my experience is that spending time focused on where the market is going, spending time with the key customer segments that are driving growth or driving the technology investment, that's probably one of the key elements here. That's going to be the opportunity to really capitalize on the AI market and the AI demand and data center.
Should I see, though, everything that Nokia does from now on through the AI filter? You come at this with an AI background. You just talked to us about some of that. Is that how you're going to approach most of what you do going forward from here? Is AI the opportunity? How Nokia comes at it, well, that's still to be determined. But ultimately, is that the kind of center of gravity that now exists within Nokia?
Well, Guy, the way I think about it is we have a strong and broad portfolio today, some of which is being touched by AI today. But I've also, the way I think about the AI cycle is it will be a super cycle. And much like we saw with the internet, it spawned the mobile internet, it spawned cloud. I believe we'll see that same thing with AI. And obviously, there's many experts in the industry talking about that. And I do believe over time it will touch all of our businesses. But the company is, and Pekka certainly is in his leadership, has done a really nice job of not just unlocking opportunities in AI, but pursuing adjacencies for our mobile networks business, for example, in private wireless and intelligent edge, in defense. And those are areas where I will look for us to continue to grow as well, because I think those are just as strategic as the broader AI opportunity that we'll capture as we as we look to see where this market grows and where we can continue to participate.
Yeah, Justin, I wonder how big your ambitions can be on the defence side, given Europe is expected to spend more on defence in the years ahead. And I know that Nokia, back in 2023, bought Phoenix, a broadband tactical communications business. Just how big should our expectations be for you in that sector?
Yeah, and again, Anna, I'll spend time, really with our customers and with my team, and really understanding what are the opportunities for growth? How much can we accelerate it? And of course, you touched on the significant investments in Europe. I'm also, believe we've got a strong history of innovation and a strong base in the U.S. as well. And I believe that presents an opportunity with us. You touched on the Phoenix acquisition as one of those investments. But I'll learn more as I get started and look at how what we can do around that capability and the potential.
So, Justin, Anna talked about defense. The other major conversation in Europe right now is electricity and its power and its energy, of course, and all of those things are needed quite a bit to get into the AI and the data center space. That barrier of entry is much harder in Europe than it is in the States. How are you thinking about it? How has Nokia maybe been preparing for it if you've been in conversations for months?
Yeah, again, Kriti, I'll continue to learn as I get started. But I think what Nokia has is a strong heritage of focusing on efficiency and enabling power efficient solutions. It certainly is something that the company is doing today in mobile networks. I think there'll be opportunities in data centers. And look, I was very encouraged by the news from President Macron today about the investment he's making in France. I think that's a good sign for prospects for growth in Europe. And obviously, as I spend time getting started, we'll look forward to how we can maximize our opportunity in Europe.
Maximise the opportunity in Europe. Does Europe... you're coming from the States, and we sit here in Europe, we've got loads of regulations, we've got regulations to cover pretty much everything. How much opportunity do you see in Europe? If you were going to... You're coming in as the CEO of a storied and central technology company. What does Europe need to do, from your perspective, to get the most out of its assets, the most out of its technology, the most out of its AI opportunity, the most out of its defence technology? What does Europe need to do to deliver on that?
Well, look, I think what's important is, for us, is we're a global technology company. We play in really, most of the major markets around the world. And, from our perspective, we're going to look to leverage our R&D portfolio across that base. And I think for Europe specifically, we'll look to support the demand as it's created. And again, I think investments like what were announced today by President Macron are really encouraging for the growth prospects of Europe.
All right, Justin Hoxha, Nokia's incoming CEO and president. We look forward to seeing how you fare, and we, of course, wish you luck on the job. We thank you so much for joining us. Let's talk about what else we have to look forward to in today's trading session as well. Of course, those China retaliatory tariffs take effect. We should also talk about the AI summit, which, of course, you heard Justin mentioned there, but also we know Tom McKenzie is on the ground for us. That's just today. Let's talk about the rest of the week as well. Earnings palooza throughout the rest of the week. BancoBPM, UniCredit, and Caring tomorrow as well. We're going to talk about the banking consolidation story, the consumer story, and then, of course, Andrew Bailey speaking as well. On Wednesday, focus shifts to the United States. CPI, Powell's going to be testifying. And then we've got plenty of earnings throughout the rest of the week, I think all leading up to that Munich Security Conference on Friday, where we may or may not get a plan from the Oval Office on what peace in Ukraine might look like.
Yeah, I thought it was really interesting the way that defence stocks moved on expectation of this just last week or so, wasn't it? A reminder that this is something that can, well, clearly it would deliver for humanity, but could also deliver for markets.
JD Vance has landed in Europe. He landed in Paris a few minutes ago. He is here. He will attend that conference a little bit later on this week. The representative from the White House. Are European stocks outperforming? Because there is some belief that maybe actually there could be some effect coming from that Munich Security Conference, which could be positive.
Yeah, what would a peace dividend look like? Where would it fall? Of course, we have Powell speaking a couple of times this week, and there have been many occasions where that's been front and centre. With everything going on at the White House, with things happening in Munich, I wonder whether the Powell testimony cuts through, or does he just find a lot of ways to say, I need more time to assess the Trump policy?
Yeah, absolutely. And, I mean, the fact that he's not already jumping to an insurance cut, which was his playbook last time around, I mean, this is in the backdrop of a consumer resilience that we're seeing in the United States, so a little bit different, but still, that seems to be a kind of consensus over in the States.
Look at the payrolls, no indication there that there's a reason to cut. The US economy feels like it's accelerating, re-accelerating right now. All of that, obviously something that he has to factor in as well. The Pulse is coming up next. We are going to continue the conversation. Some great guests rolling throughout the day. This is what European markets look like this morning. This is Bloomberg.